Good morning. I'm recording from day 2 of the Morningstar Investment Conference in Chicago, and I just wanted to talk about some of the takeaways that I had from yesterday. It was a shorter day, there weren't a ton of takeaways, but I found it striking. I went along a lot of sessions about ESG, or environmental, social, and governance investing, and it's been interesting just to hear the different philosophies or the different thought processes from the different companies within Morningstar, because there's different divisions or different companies entirely, and just how they're viewing data. And it's always striking with ESG data just how different everybody's definition is, and how difficult sometimes even getting the data can be. You know, a lot of these companies, or a lot of the data Morningstar is taking, is being self-reported from companies, which, as you can imagine, poses some problems. And I think it was something like 1/3 of the companies that they track in this particular set of data don't disclose carbon emissions. So you can imagine how difficult it is to produce reports without that data. If the company's not reporting, you either don't have it, or you have to go to other sources to try to find some other data. The other thing I found interesting was, depending on the company you're looking at, each sort of company within Morningstar had a different opinion of it. So on one of the panels yesterday, they were talking about Beyond Meat, which produces vegetarian products that are sort of like meat. And within the food index, this certain analyst was talking about how it is solving a lot of problems as far as food scarcity and the impact on the environment, because it's, to produce beef, as an example, it takes a lot of input, and it wreaks a lot of havoc on the environment, and it increases crop yields in a way, if you want to consider it a crop, with less intensive farming compared to beef. So for that food index, it was doing a great job. But as another analyst pointed out, it's a new company. It doesn't disclose a lot of ESG data, so there was a severe risk, if you will, investing in that company. And so it's interesting to hear the different perspectives on a company and sort of how it fits within this ESG data. And it just goes back to the idea, and why I think ESG is so hard, is that each person's values, each person's preferences, what they're looking for is different. So there's no one size fits all. And it goes to one of the keynote speeches yesterday, where they were talking about how active personalization is sort of the new active investing. And what they mean by that, or what I think they mean by that, is the fact that people are going to have their different values, and they want their investments to somewhat reflect their values. So it's been interesting to hear the different companies in Morningstar and how they're approaching this data, and just seeing that we're not even introducing two investors, we're just talking about two analysts at this point, and how different their opinion can be of a company, what's out there. Another session I sat in on yesterday was pretty interesting. I went to alternative investments and the place in client portfolios, and I'll be honest, I'm not a huge fan of alternative investments, depending on how we're defining alternative investment, just because historically they've come with high fees, low liquidity, meaning it's hard to get out of them if you need to. It's not like a publicly traded company that you can just sell. And so it was interesting to go through the session. I'm gonna look down at some of my notes here as I talk, but there's new regulation out, so they're saying that more of this will likely come to the masses, which means that more retail investors are going to have access potentially inside 401ks. And so I think it's important to stay up to date on this type of information and what's out there. And so as I was looking at it, they had this great chart about how if you're going to invest in private equity, often it's a 15-year time frame. So if we think about investors and the uncertainty that we can have inside 15 years, right? Are there colleges that we need to pay for? Are we going to want to move homes? Are we going to want to buy a boat? Do we just want to increase our retirement spending? Whatever we're trying to do, whatever we're trying to spend money on, we want to make sure that the money is there for it, and it's not locked up inside of this investment. The other thing I found pretty interesting when we talk about alternative investments is there's a lot out there. We could be talking about private equity, we could talk about hedge funds, commodities, private debt, all these different investments, and they showed a range of returns for different managers. So really the best manager with high returns down to the low, and then a median. And it was interesting to just look at the disparity in that depending on what you're investing in. So they gave the example of private debt, so essentially just loaning money and sort of like a bond-like return, but maybe a little bit riskier depending on the type of bonds, and paying out interest on that. And it had a pretty sort of low range of returns, right? The best manager wasn't that much better than the median, and the lowest wasn't terrible. Whereas if you looked at things like private equity as an example, just huge, I can't even get my hands in the frame here, huge dispersion of returns between the best manager and the worst manager. And so depending on where you're investing, just more due diligence has to go in there, or potentially accepting a wide range of outcomes. And that's one of the issues I have a lot of times with alternatives is you have to do the manager due diligence, and oftentimes the best people that have had historically the best returns, it's harder for everyday people to gain access to them. Often it's a select group of people that are going to be able to even invest inside their funds. So the people that you can probably place funds with likely, or maybe potentially, are going to have lower returns, I should say. And so it was just an interesting session to see that visually. I'll see if I can get the slide and put it here in the video about how those returns can come to be. The other thing I found interesting, a big focus on fees, right? A lot of times these private investments, or alternative investments I should say, they're charging 2% plus some sort of performance fee. So after a certain amount of time, it gets very expensive compared to traditional investments. It represents a hurdle rate or something that you have to get over to have sort of excess return, if you will. So I just thought that was an interesting session on alternatives because it's something that I don't use a ton, but always keep my eye on just in case there's something that I find interesting out there or worthwhile. It's day 3 of the Morningstar Investment Conference, and I want to talk about what I learned on day 2, or just some interesting panels that I went to. One of them was the sort of the net zero carbon emissions by 2050 and whether that's a possibility. And they had a few people from the investment world up there, and the short answer was it seemed kind of bleak. There's a lot of energy sort of consumption that we have to change, both on a residential level, on a commercial level, with shipping, with air, and how in some areas there's technology that needs to just be replaced, whereas in other areas the technology doesn't really exist today. They were talking a lot about within shipping and with air, there's really not the tech, there's just not the technology. It doesn't exist today in a form that can do what we need it to do, whereas on a residential level, a lot of times the technology exists, it's just a matter of the infrastructure and replacing a lot of what we have today with something new. And I found it interesting whenever you're at any conference, you're going to have a different opinion. And throughout sessions yesterday, nuclear was a big thing where some people are very pro-nuclear, others are very anti-nuclear, depending on sort of where you're coming from. And so it's just been interesting to see sort of within the theme of ESG investing, whether just the idea that everybody's definition is different, right? We have professionals here that do this for a living, and they can't really agree on what ESG investing is. So I think it really comes down to the personalization moving forward and people's values and what they're comfortable with. The other thing I found interesting, I went to a session, I don't remember the exact name, but it was something like software has eaten the world, what's next? And I didn't have a ton of takeaways in terms of what's next. Some people talked about crypto, some people talked about robots, and robots can mean a lot of things depending on how people are looking at it. It's not just sort of the form of what you picture a robot when people say robot. But one of the things I found interesting was they had 2 growth managers, so sort of high-flying companies with more potential versus value companies that still have potential but aren't as well loved. And we're in a period right now where value-style companies have done much better. And it was interesting to watch the 2 growth, more oriented portfolio managers talk about how they got Netflix wrong. It's down about 75% off its highs recently. And it just is a good reminder about how when you're picking individual stocks, you can be right for a really long time until you're wrong, and it can happen really suddenly because the drop happened pretty suddenly. So it's just interesting to see sort of their admitting that they got a lot of things right, but they paid too much for it, which is often a theme that comes up with individual stocks. You can have the best name, best growth, all of that, but if it's already priced in, none of it really matters because it depends what you pay for it and your starting point in the stock. So I found that refreshing in some ways that portfolio managers were able to admit that. A lot were still doubling down on Netflix in particular, and I don't take opinions in any individual stocks really, but it was just interesting to hear. Also attended a session on investing in climate transition. It was just interesting to hear sort of the different progress in different organizations and how how they're working together and how they're coming up with investment solutions where sort of everybody's winning. Someone gave the example of a World Bank in a certain bond where people had excess cash, maybe they'd put it into this particular investment because their principal was guaranteed, but they had the potential for higher returns. I think they were talking about some sort of rhino. I forget the exact type of rhino, but if the rhino population grew by a certain percentage, I think it was above 2%, you basically matched the return of this other bond, but if it was above that, do better. And so it's just interesting the different investment solutions that are coming up now, and more people are talking about these types of investments that they want. There's more innovation that's coming out, and innovation can be good or bad. I think in this case it was good, but it's just something to keep an eye on, that as more products come to market, we're going to see things that are maybe a little stranger, that could be good, that could be bad. Just something to watch. Main reason I came to the conference was to watch a friend give a panel about creating generational wealth, and so it's fascinating to hear from three folks that don't make up the majority in the investment industry, white men like myself. And so it was great to hear their stories where you can find resources. They talked about redlining and housing and just how that has affected wealth. Talked about just sort of the backstop, whether that is family that you can go to or the way that you can get a loan, and how that is not necessarily accessible to other communities of color. And there were just a lot of great takeaways from that, and I love that an investment conference is talking about that stuff, because let's be honest, a lot of times that is not being talked about at all in the sphere, and it's being dominated by white men in conversations. So I really love that panel, and unfortunately it was a really short panel, only 30 minutes, and you had three folks talking with a moderator, so we didn't get to go in depth as much as I would have liked. And then the last main section I went to was essentially, I'm going to butcher the title here, but how to not lose your mind while paying attention to Washington. And I think a lot of us can empathize and feel that one there. I know I can the last few years, where just proposal after proposal gets thrown around and you're not quite sure what to watch. And in my line of business, it's really important to watch the legislation that's coming out, because it's going to affect planning strategies. We've had a ton of that over the last few years as things have changed. And I think the main takeaways for me were, you're going to have a lot of divided government. That's normal. They were sort of thinking that there'll be a lot more divided government in the future, and don't really see that changing, and it matches with history, so I'll go along with that. And just sort of what to pay attention to. A lot of times media articles are going to bring to light things that maybe have less likelihood of passing, because it draws a lot of contention out there. And so that's just something to remember, that if you have a deeply divided government, a lot of people aren't agreeing on something, it may not pass, and maybe that's something that you pay less attention to going forward. Whereas if you find something that has a lot of bipartisan support, maybe that's something that you do pay more attention to. And I know that sounds very simple, sort of as I say that out loud, but I think when media is talking about these things, when you see proposals thrown around there, our emotions tend to rise up, and we sort of forget sort of those simple facts of it's very hard to pass legislation today. Things have become more polarized, and so the types of things that you have to pay attention to are probably less so than a lot of things that we do pay attention to. So this is day 3. We have some more panels to go to today. It's a shorter day, and then I am headed home. I apologize for my voice. There was a blues concert last night, which was great fun. Loved it. Great chatting with people. But anytime you're in sort of those venues, you're talking over people. So I'm going to rest my voice today, and hope you're all doing well.